One of the topics that both the left and the right can agree is a problem is crony capitalism. Crony capitalism is the phenomenon that happens when the policies of the past come to control the future. It is something that the left and the right agree is a negative, but they differ on who is to blame. To the left, crony capitalism is a process by which evil corporate interests gain control of good government policy. To the right, crony capitalism is about how evil government forces gain control of good free market forces and entrepreneurs. But either way, both sides agree that it's a dangerous process that tends to hamstring innovation in government, in policy, and in the economy. This discussion is a fascinating one. We begin with a very energetic discussion by David Stockman of the Reagan administration about the effects of crony capitalism, and then we have a freewheeling debate between Anna Berger, who for many years was the most powerful woman in the labor movement, Luigi Zingales, the University of Chicago economist and a favorite of Tea Partiers, Ed Haldeman, who has surprisingly frank discussion of the power of crony capitalism politically, Peter Schweitzer from Hoover Institute, Susan Oakes from Aspen Institute, for a fascinating discussion of crony capitalism, what it is, who's to blame, and how we get through it. I hope you enjoy it.
Now, where did it come from? I think everybody has a different answer. Some partisans think Obama brought it, others think Bush brought it, some think it started in the Reagan era with deregulation. But I think crony capitalism really got implanted in the United States with the abomination of August 1971, when Nixon came back from Camp David and announced the four evils, that he was defaulting on our obligations under Bretton Woods to pay off our international balances and closing the gold window, and thereby putting us on a course of essentially fiat floating money that has now led to the crazy situation that we're in today that I will talk about. Second, he put on wage price interest and profit controls on the entire economy, saying when the election's at stake, maybe free enterprise is not so important. After all, he put a 10% import surcharge on everything and got in a huge nationalistic conflict with most of our allies in the rest of the world. And so, therefore, it started a process that, and then he had the bad grace, I guess I would say, to pronounce at the end, we're all Keynesians now. And what that really meant was that the government will become omnipresent in our economy through the fisc, through the monetary process, through various kinds of direct intervention like it's never been before. Now, I used to be a budget guy, and I was far too sophisticated to believe in something as crude as the balanced budget. But I want to tell you, when you look at the system today, where every spending program is a jobs program or an economic stimulus, and every provision of the tax code is a job program or economic stimulus, the system is incapable of making choices, trade-offs, incapable of looking at revenue and expenditure as the accounts of the public finances of the United States and view them only as an economic stimulus instrument or part of the machinery. So, yes, if you had a balanced budget amendment, it may be inconvenient, and it may mean that the economy can't be, stoked up and stimulated and artificially propped up. But the alternative is bankruptcy. There is no doubt about it. The reason they can't agree on anything is not because we don't have camaraderie after 5 o'clock. I actually disagree with George Shultz on that. It was just as bad in the early 80s. The only difference in the early 80s was until Reagan came along and we really screwed it up. People were afraid to death of deficits and of national debt. And now we've gone 30 years. It doesn't seem to do any harm. So therefore, let the other guy deal with the problem. We're only going to put the genie back in the bottle if we have a balanced budget. 3 ideas: abolish incumbency, abolish the Federal Open Market Committee and its activist intervention in the economy, adopt a constitutional amendment that requires a balanced budget. Those 3 things would fundamentally reorganize the environment that we're in, would allow both free markets to reemerge and democracy to have a chance.
So, generally speaking, do you guys think our society, America today, is overregulated or underregulated?
I would say it's badly regulated.
Okay, that's an interesting answer.
I think that, take Dodd-Frank, I think that Susan is right that there are some aspects that are valuable, but I think that most of it is, first of all, very hard to understand. It's 2,400 pages, and mandates to 67 studies and further regulation. So basically, no human being except a full-paid lobbyist will read what is in it. I think that we should have regulation that is so simple that even congressmen can understand it. And it's not a joke, because Nancy Pelosi, when she passed the Obamacare, she said, we need to pass it to know what's in it. So I think that having this limit is not just for congressmen, but it's for individual people. I think the only balance we have is sort of people's control over what is done in Congress, and this control is only possible when things are extremely simple, at the cost of being inefficient. I think that the separation between commercial investment banking, Glass-Steagall, is inefficient. However, it's not too bad, especially if you compare to the Volcker rule. The Volcker, I have deepest respect for Paul Volcker, but the Volcker rule is not implementable, and it's an example of what he was saying before. Is basically the Obama administration wanted to police the crowd with some regulation. The industry did not want any regulation to take place, so you have the perfect combination, something that looks good, has a good name, and is completely unimplementable, and keeps employed an army of lobbyists and lawyers in Washington to try to figure out what's going on.
So doesn't that go directly to crony capitalism? We had a financial industry that was against Dodd-Frank and did everything that they could to defeat it. And when they couldn't defeat it, they loaded it up with a lot of extra regulation and language to confuse it so that they could get around it. And so it's exactly how big corporations of the financial industry uses their power and their clout to make something work for them and not for anybody else.
Absolutely, I think that, but that is a big limit on government intervention. If we recognize the fact that regulators are mostly captured, this puts a big limit on what government can do. And this is not a conclusion. Some people push it to the conclusion you should have no government or zero regulation. I think that's the wrong conclusion, but it does put a limit on what is the reasonable regulation you can implement.
But part of the problem is that there's so much big money in politics that the lobbyists from the financial industry are running all over the Capitol trying to own people. And so maybe what we need to do is figure out how to get money out of politics so that we can actually have a government that's making decisions that's good for all of us, not just good for those who have the most money, who can manipulate the system in the greatest way for them.
But even if you take all the money out of politics completely, you still need to have a conversation between regulators, government, and the business community, because otherwise you can have so many really bad unintended consequences of policy that if you're not getting kind of that granular perspective of what's happening on the ground, you can really create incredibly distortive effects in the market, as you guys would well know. So you have to find the right balance between getting enough voices into the pool so that you're really getting all the perspectives and then making good decisions that are clear and regulatory. That makes sense.
So to that point, you know, often we hear about the revolving door between business and government. I have some people make the case that revolving door has some benefits for society. Susan, I'd like you to speak to that.
I agree. I think, you know, one of the worst things we can do is just tar everybody with the same brush and just say everything's bad. Anybody from government going into industry is bad, or vice versa. I think, you know, people are individuals. Some of the, you know, my old boss at the SEC, Arthur Levitt, came from industry, was a creature of industry for several decades, came to the SEC and made investor protection one of his biggest priorities, much to the consternation of the securities industry. And he also went after the accounting firms. You know, I mean, he was a pretty strong regulator. I think in hindsight he would say he wishes he were even stronger. and had done things even more aggressively. But so I don't think that you can say it's blanket bad. And again, you need some of that expertise. If you had, you can't create solutions in a vacuum. And if you have nothing but kind of regulators holed up in the Treasury Department trying to decide things who've never actually been in a bank or worked at a securities firm, I think it can be worse.
But Susan, the example you picked was someone moving from industry into government. I have a hard time coming up with any difficulty with that. In fact, I think there's a lot of advantages.
A lot of people do criticize that.
I can come up with some examples.
I'm much more troubled the other way. And we in the mortgage industry, we just had an awful example when people left government and joined Fannie or Freddie and were able to impact legislation, were able to impact regulatory authority. It's pretty ugly when it goes that way. Do you differentiate between the two directions?
I can see there are more challenges that way, but I do also think you can have somebody who comes in from industry and you can say, oh, they're just trying to deregulate everything and just try to cater to their old buddies on Wall Street, which is frankly what a lot of people have accused Hank Paulson of. I do not. I don't put claims to that, but a lot of people said, oh, he only bailed out Wall Street because he was one of them. And I don't think that's all the reason why he did.
Why? Why then?
Why?
Yes.
Because I think that he truly believed that the entire financial system was on the precipice of disaster. And that
Susan, I believe that too, but there wasn't just an alternative between Armageddon and bailing out everybody. There was a middle ground that he never wanted to consider. Why never wanted to consider? Maybe it's simply sort of a cultural bias. I'm not saying he's an evil person and he's just trying to enrich his friends. Simply, he talks too much to his friends and believes that the war is ending. And their war was ending, absolutely. And so he came to the rescue.
And he only rescued some. He only rescued Wall Street and not Main Street. And so it doesn't, basically it is
That's
true.
not
in
true.
terms of the,
700 banks got TARP money.
But in
$700.
terms of people in their mortgages, people on Main Street, individual people were not part of that bailout at all. And so it was focused totally on one part of the economy and not on the 99%. But I would also just say that in the revolving door, there's a lot of revolving door that has a direct impact. People come from industry. CEOs of mine companies go into the Mine Safety and Health Authority and deregulate mining, and people die. Food, ag folks go into agriculture and make decisions that's good for big ag and not good for others, and it is bad for the consumer and it's bad for our economy. So that the revolving door from industry in a government, if they're going in to be able to deregulate or do their own thing and further their own causes, is hugely damaging to our economy and to our consumers. So I would say that the revolving door is a dangerous thing, and how do we figure out how to regulate it or monitor it or put transparency on it so that we can see what's really going on?
But you would never shut it down.
No, not at all, but we do have to have transparency.
Right.
We do have to have some kind of standards. Mm-hmm. We do have to have some kind of expertise that's really dealing with some of these things.
Yeah, but do you think that transparency is enough? In a sense, it's very transparent that Robert Rubin stepped down from the Treasury and went to Citigroup, that helped sort of create when he was at the Treasury, because he allowed sort of deregulation. And he paid no consequence of that. Now, I'm not saying legal consequence, everything he did was legal, but from a social point of view, I think that what he did was not good. But he's sitting on the board of trustees of Harvard Corporation. He's considered like a great man, and nobody sort of criticizes him. So even if there is transparency, I think what you have to create is also awareness, because most people are happy with it. They don't complain.
All right, well, let's talk about when laws are broken, because we are 4 years into the financial crisis. It looks like it's going to continue on for a good while here. We're settling into the new normal, as Mr. Al-Arian has referred to it. And yet, aside from Mr. Madoff, no one's gone to jail. Why do you think that is, Peter?
Well, first of all, I'm not an attorney, so I don't want to pretend that I'm a legal expert. But I have some views and theories on that. I do think that if you look at the financial crisis, you certainly had people that were making risky decisions and risky choices, and that's just a consequence of what they do. I also think, though, that there's evidence that there was, in some instances, criminal fraud that took place, meaning that people were clearly misrepresenting investments. They were purporting them to be something that they were not. There were certainly financial institutions that were, for example, selling mortgages to Freddie Mac and other government entities that claimed that they were much more secure than they were. And I think in those cases, again, I'm not an attorney, but you should look at criminal charges. The question is, why have none been brought? One of the theories is that the system couldn't take it, and that it would destroy confidence in the financial system if people started going to jail. I actually think it's the opposite. I think confidence would be restored because people had this sense. I think it is largely a cultural problem. Part of that is, if you look at the current Justice Department and you look at the top 4 or 5 justice officials, none of them are recent prosecutors. They're all white-collar criminal defense attorneys. They all come from firms that represent large financial actors, whether it's large banks or large investment houses. So I think the question becomes, on an individual basis, do these government officials, in terms of their future career development, have a disincentive to throw people in jail that perhaps were clients before or maybe clients in the future? I think it's an enormous problem. I think, honestly, that until you get an absolute accounting in terms of individual responsibility, there is going to be mistrust of the financial system. And by the way, I don't get the idea that we had regulatory failure in 2008. There were plenty of laws and regulations that were violated. So the solution is to create a bigger regulatory environment. I think the problem is with enforcing laws and regulations, not with creating new ones.
Anyone else?
I say send them to jail.
What's that?
I say send them to jail.
Send them to jail. Okay.
Yeah, but I think the real issue is why it hasn't happened. It seems to me that attorney generals have a huge political incentive to enforce and put people in jail. We sometimes, on our side, are critical of AGs for doing it for headline purposes. So we got 50 of them out there, presumably seeking headlines. I've worked with the SEC, and we have really, really capable, smart people on the enforcement side down there that I have tremendous respect for, who are working incredibly hard. I think part of it is really a tough standard of proof, particularly to get the senior people who were fairly much removed from the day-to-day decision-making, perhaps.
I think those are all legitimate points, and again, I don't have a legal background, but what is striking to me is that there's a financial crimes task force that the Department of Justice has that's coordinating these things. You can actually go to the website and see who this task force is going after, and literally they have people that are rigging homeowner association condo elections in Las Vegas that are facing 6 years in jail. You have people that were inflating their appraisals of a couple of pieces of residential real estate that are facing jail. It just seems to me that there is this huge disparity, and that I would argue that there are people in Wall Street that are too big to jail. To go along with too big to fail.
What I don't understand is with Sarbanes-Oxley, I mean, weren't CEOs supposed to be held accountable? Correct me if I'm wrong, please. CEOs and other people.
No, we sign off on every quarterly statement, absolutely certain, and as does the CFO. And I have to say, as somebody who has sat through that many quarters, people take it very, very seriously and do worry about the ramifications of that signature on the 10Q and the 10K. It's taken very, very seriously.
I would be interested to know, each one of you, you pay attention to this sort of thing. When Mr. Bernanke came out and introduced QE to infinity, what was your reaction?
I think that I divide things between the first and the rest. I think at the beginning was not crazy to increase money supply. I think that there was, number one, a panic, so the demand for money increased. There was a reduction in lending that slowed down the multiplier. So I think that increasing the supply of money in that moment was reasonable, and in fact had quite a big effect. Moving forward, my concern is that it does not have a lot of effect on the GDP and growth, etc., but it anesthetizes the budget problem so that the politicians don't see that there is a big wall at the end of a tunnel, and they are like running against that wall.
So when do we hit that wall?
I think that we'll see. I think that the big sort of alarm will be when Japan gets into trouble. I think that among my faculty there is this joke, you know what's the difference between Japan and Greece? 3 years.
Oh my.
So go ahead.
Yes,
You
no,
go ahead. I felt it was a big mistake, and I thought it was a result of where we are in the election cycle, and that it was going to result in asset bubbles. And like Luigi, I thought that what the Fed and the Treasury did in 2008 was sensible. Looking back, people can say it was too much and we should have thought about a middle ground. I think maybe even Luigi said that. But that's with the benefit of 20/20 hindsight. When you're going through it at the time, you don't know where the cliff is, you don't know how bad it is, and the worst thing that can happen is you take that 5% chance and it goes over. So I think they handled it masterfully in 2008, but I'm really troubled by continuation with QE3.
The thing that strikes me as I look at housing is a lot of the banks that are foreclosing on people manage their books far worse than the people they're foreclosing on. And I think for a lot of Americans, that's a real fundamental thing that gets at them every time they pay their mortgage. How much do you think that's a factor in the American public today?
I think it's a huge factor. That's the reason why in 2008, this is not the benefit of hindsight. In 2008, I had a plan that suggested you should treat the banks and the individuals in the same way, through a form of debt for equity swap. And that would have been sort of fair across the board. This was completely ignored, and I disagree with what Ed is saying, because I think the help you gave, gigantic help to people like me who refinance and at a very low rate, but if you were really underwater, which are the people you really want to help, those people got nothing. In fact, they saw the other guys refinancing at a fantastic rate, and they got stuck. So I'm not so sure that the reallocation was given to the right people, the people most in need.
So you think there should have been an active principal reduction program?
Absolutely. There was de facto a principal reduction program for banks. I don't know why you didn't have for this, especially for people that did not sort of take too much risk. They simply bought the house at the wrong time.
Yeah, so Luigi, how are you going to pick out those people who just were well-intentioned people who bought the house at the wrong time versus those people that bought 4 houses, or those people who bought too much house and had people who put nothing down? How about those people who did the home equity loan? How are we going to differentiate between the good people and the bad people?
If your house prices in your zip code drop 30%, it's not your fault. Is sort of an extreme market movement, like was an extreme market movement for toxic assets, and people intervened to try to rescue the banks. So why to save the banks and not the individuals in that situation? And today we have very regional and even zip code level indices that allow us to just go in the areas that have been hit the most and not across the board.
But many of those people, even in those depressed zip codes, were people who took their equity out of the home and took it down to zero so that they could do a vacation.
Yeah, but a lot of the managers of the banks...
Generally speaking, that's not why people were refinancing their homes. They were refinancing their homes, and you can look at the data, because they had a medical emergency, they didn't have health insurance, because...
In many cases.
Many cases, because they were trying to put their kids through college, because they had lost their job and they were trying to figure out how to keep their families going. It wasn't that they were refinancing and taking it down to zero.
No, but the cash-out refinancings was actually a much bigger portion.
But in terms of the people that we needed to figure out a solution for, to figure out how to draw down their principal and refinance their debt, they were all left out in the cold.
All
I
right.
think my
Not
point
through
is
any-
it was
not
very
through
hard
any-
to differentiate those cases is my point.
Okay. Were the bailouts, the bank bailouts and the auto bailouts, worth it if it fundamentally undermined the American economy? And you don't have to accept my premise.
Well, I don't accept the premise. But first of all, I just think that we're missing a whole, if we're talking about crony capitalism, we're missing a whole other section of crony capitalism, which I just don't want to get away
Please.
from. I mean, because the reality is big money is buying our government.
For sure.
And is building the greatest inequality in our history since the Great Depression. And somehow we have to address that. So I just want to give a couple of examples coming out of the labor
Please do.
experience. Because I spent, I grew up, I'll age myself, I was born in 1950. 1 in 3 workers in the private sector were in a union then. And from 1947 to 1979, we had the greatest prosperity that this country has ever seen. The bottom 20 and the top 20% of people all grew. We had high unionization, high regulation, and profitable economy, and are the greatest middle class that this world has ever seen. Attacks on the labor movement, attacks on regulation, the deunionization of our country, if you trace prosperity and inequality with the density of the union movement, you'll see that as the union density fell, so did prosperity and so did the middle class. And who was at fault for that? Corporate cronyism. Corporations buying government and trying to deregulate and deunionize the country. And right now we have the Koch brothers as the perfect example. The Koch brothers, who have been using their millions and tens of millions of dollars to try to buy government, to try to buy election, are now dumping money in California to support an initiative that will take workers' money out of politics. So they have free rein to spend all of their money to buy government, and they're going to try to deunionize. First they try to deunionize Wisconsin, and now they're going to try to deunionize California and the rest of the country. And so if we're going to try to grapple with what's really going on, the bailout is one thing, but how do we take out corporate money, big money that's trying to distort our society, and give it all to the top 1/10 and leave everybody else in the cold? And the reality is, every single day we are getting our inequality is growing more and more, and so we have to tackle that problem. I actually, some of the points that were made earlier in terms of the big money in politics needs to get addressed. It is how corporate cronyism undermines our society. And so we can talk about the bailout, we can talk about other things, but how do we talk about that one? Because I think that if we could do that, if we could turn back Citizens United, if we could have public finance of elections, if we could put transparency on it, we would be in a much better place.
And I think that is absolutely right on. I mean, that is something that needs to be addressed. One of the things that I find interesting, and I think this is an important point too, is that labor contributes a lot of money to politics as well. Is that the same?
Well, first of all, our workers, in my union, people who, we give money to politicians, we give money to politics, that individual people decide to do. It's not coming out of their dues. They check off a thing and say, I want money to go to politics, because they're janitors, they're nursing home workers, they're home care workers, they're workers that have no voice, no money on their own, and they want to be able to have their voices heard. They want to be able to talk about education. They want to be able to have a collective voice about fair pay, fair hours, and all of that kind of stuff. And the only way that they can be heard is if they do it together. We use that money oftentimes by getting workers involved and going to meet with their legislators to talk about what the critical issues are. I think that workers should have a voice in our society. That's why, and they should be able to come together and express their voice collectively. It's different when corporations, which are taking some of the money out of our pocket, use that money against us. And sometimes, in some instances, with the publicly invested firms, our union money, workers' money, which are in pension funds, are going into corporations that are then turning around and using that to buy government against the people. It is not right.
And you know what? What I think is interesting about the issue of crony capitalism is that you can come at it from different places. Labor sees it one way. Perhaps the more free market-oriented people see it another way. But we know there's something deeply wrong. And it's something that we need to address as a society. And with that, I'll say I appreciate you guys taking the time out to participate in this discussion. I think we all learned a lot. I know I did.